to this Conhome event in partnership with Virgin Money. We've got a great panel here. We've got Simon Norman, who's head of business banking at Virgin Money, Greg Smith over there, shadow minister at DESNES and DFT and former shadow business minister, John Glenn in the middle, who's a Treasury Committee member, former Chief Secretary to the Treasury and now Kemi Badenoch's PPS, and William Bain at the end, who's Head of Policy at British Chamber of Commerce. My name's Tally Fraser. I'm the Assistant Editor at Conservative Home. Today's panel is about unlocking SME growth and the role of mutual business banking in a thriving economy. I think everyone here knows that small business owner, the entrepreneur and the self-employed who form not only most of the business community and the wider economy, but they are a crucial part of the Conservative electoral coalition. It's a really important base, I think, for the Conservative Party, and I'm sure the two MPs on this panel are well aware of that. But there is a struggle of keeping small businesses afloat and large costs and just trying to unlock that growth for SMEs. So I thought we'd start with Simon to hear about the specific opportunities available for SMEs and for the Tory Party to be looking at and what's there in mutual business banking.
Okay, thank you. Good afternoon, everyone. Thanks for coming along. So Virgin Money, in its own right, has got a proud history of supporting SMEs. So we serve over 260,000 SME customers today, ranging from the very smallest startups to businesses that are much bigger across all sorts of sectors. We see how confidence in the economy and confidence in banking causes businesses to hire, to thrive, to invest, and we also see where the absence can be true. The market's really opened up post the GFC. So back after the GFC, 90% of lending came from the big four banks. More recently, it's kind of 60% is coming from challengers, which is really useful in terms of competition within the market. The UK model is very different from a mutual perspective to the European model. So 70% of SME business is held by mutuals in Germany, 35% in France. The model, as I say, is very different. However, as part of Nationwide, so Nationwide acquired Virgin Money at the start of October last year. We're part of the biggest mutual in the land with a full-service business bank wrapped within that. So we see the opportunity is really big. We've commissioned research to understand what SMEs need. So we always start with the need rather than what we think they want. And the answer is needs differ, of course, for all sorts of reasons across all sorts of businesses. So many companies don't want to build an empire. So as a bank and as a mutual, we find we're often asked about access to finance. In our research, 25% of customers said that was a bit of a barrier, and that compares to more like 70% who are concerned about energy prices. So, really interesting to focus on what they need. Knowledge gap. The knowledge gap is really important for SMEs as they step into, starting their business, growing their business. How do they raise debt? What sort of debt do they need to raise? Where do they get it from? And we think there's a big sort of opportunity for a pan-industry education process to help businesses grow. And service really, really, really matters to businesses. So they are time poor, and so they want to enact with their service provider through their channel of choice and basically have it happen smoothly and slickly. So since Nationwide acquired us, we've invested in customer support heavily. So we have moved from answering the phone as a really crude stat around 85% of the time to doing it more than 95% of the time and more than 70% of calls within 10 seconds. And that might sound hugely basic, but it makes a massive difference to customers. As I say, look, it's early days with Nationwide. We're a year into this, but the focus on business bank and the aspiration for growing so that we support the UK economy is massive within the mutual. So we look forward to executing against that, Tali.
Thanks very much. Greg, I know that you've raised SMEs a number of times in the Commons and have sort of spoken out and advocated for what support there could be. It would be great to hear from you.
Thank you. Good afternoon, everybody. I come at this from a very simple perspective. All of us want to see growth. Conservatives know how to actually deliver growth compared to a government that talks about growth and then puts every barrier up in the way of growth and in the way of people growing their business. And I was always struck when we came out of the 2008 crash and when George Osborne was the Chancellor and we did see significant growth through that period. One of the key enablers of that growth was people taking a risk, was people setting up their own business, registering as self-employed. And I think it's very important when we talk about SMEs that we think about those literally setting up as one-man or one-woman bands, the stepping stones to potentially becoming a limited company or whatever, but taking that risk, being an entrepreneur. And, you know, that's something I did back in 2004. I spent 15, 16 years before I was elected to Parliament in 2019 running my own business. Yet when I talk to people in my constituency and during much of the last year when I was in the Shadow Business and Trade team, you go out and people say, oh, it's just too hard. There are many reasons for that now, but one of the key ones that kept coming up is the inability to get the most simple of banking services. I was speaking to a builder the other day, self-employed builder, very good, great word of mouth. He's booked up for a couple of years. Everybody wants him to do a kitchen installation or a new bathroom or an extension on their house. But he had a little note from his bank. Perhaps he'd been quite naughty and was using a personal bank account for his trading. He has found it nigh on impossible to get a bank account for his straightforward business purposes. And it seems that we need to roll back whatever regulation is getting in the way of that, that whatever is telling the banks, you know, this is all too risky, you really shouldn't take this on, when someone who is an established businessman over many, many years with bookings for his particular trade, you know, going into years, and still nobody wants to touch him. He's not even asking to borrow any money. He's putting money in every month. Yet something is blocking that. I was out, a totally different subject matter. I was out in the UAE at the start of September at a conference focused on issues out in the Middle East. But while I was out in the UAE, I was talking to some of the government officials out there. They have now got the most staggering approach to startups, part of which is the way they look at banking, where you can go from an idea to being trading in 5 days, all bureaucracy done. Wouldn't that be transformational if we could have that level of enablement for our entrepreneurial sector in the United Kingdom? All bureaucracy done in 5 days. You're trading, you're out there, you've set up your coffee shop, your building company, whatever it might be. And I think we really need to look at the banking sector to be part of the solution there, because too many businesses in my own constituency and further afield are telling me, I'm afraid you're part of the problem at the moment. I'm very excited to hear the Virgin Money offer that's coming along. You won't be able to do it alone, but if you can open up those doors to everyone that's got a great idea, that wants to take that risk, yeah, not all of them are going to succeed. That's part of the market economy. But enable them to take that risk, and I think we can see growth in this country going at the sort of rate that perhaps not the UAE are at right now, but certainly getting close to it.
Thanks very much. John, obviously you were in the Treasury sort of trying to unlock that growth. What's your perspective?
Well, I think it's worth just stepping back and saying, look, what is the banking sector in the UK? Where's it come from? Where are we at now? And what could change? I think the thesis behind the question is that somehow SMEs don't access finances from banks, lending, bank accounts easily enough, and I agree and note all of Greg's observations are ones that I experienced myself in my own constituency work. But I think it's important to step back and say, look, financial services is very strong in the UK. It's 10 to 12% of the tax revenues. It's a massive part, not just the City of London. It employs lots of people outside of the London and the South East. We've gone on a journey over the last 10, 12 years. We started in the coalition years of actually allowing people to switch bank accounts very easily. Not many people want to, but they can do very efficiently and easily. We then had a small banks setup unit that came in I think, 2015-16. But if you look at a bar chart for the size of the market, then what you'll see the four big banks still having a massive share, and then you come down to the others, respectfully. And the problem we've had is the scale up of those other banks and the requirements that they have to hold capital, and whether that's proportionate and whether it actually sort of blocks a certain lot into a small segment at one end rather than enables them to compete. And that is something that I was keen to address. And so when I was the city minister between January 18 and July 22, I put in a competitiveness imperative into the legislation, which the PRA, Sam Woods now says he welcomes, and it gives them an opportunity to look at how they can create different capital requirements for banks. But we have got some way to go, because it is quite complicated, because also in the country, and this is, I think, something that what Greg has spoken to, and I think we need to challenge during this time in opposition, is that our expectations of consumer redress are very high. If anything goes wrong, then it's the regulator's fault, or it's the bank's fault. And the same sort of filtrates through into investments as well. And I think that we started work on the Consumer Credit Act reform. The FCA, are keen for us to, as a country and for the government to look at that. And I think we do need to deal with that, because there are blockers to both banks accessing finance and growing and accessing the bigger market, but there are also constraints on what they're prepared to do, because they're fearful that they will have missold or be seen to missold several years later. And we've got an instance at the moment which I think is worth me saying a few comments on, because we're looking at it on the Treasury Select Committee, around motor finance. And it's deemed that there's harm. Harm has been done because people have bought car finance products, where essentially, for me, there's three elements. You go to the showroom, you say, I've got this car, I want to trade it in, how much will you give me for that? I'll put down a deposit and I will have a monthly payment. That is transitioned from, most people do that these days. Obviously, if the deposit goes up, then your monthly payment goes down. But under the Consumer Credit Act, it is deemed to be that the person who provides you with that financial product has to have declared what payments they received as an incentive to pay for that. And harm has now been done. Well, I've taken out 5 of those over the last 12 years. I don't feel harmed. I made a choice. If I wanted to know more, it should have been more on me to have asked, but the legislation doesn't respect that. So these are the sorts of things, in terms of constructive conversation today, about things that we need to change. Because SMEs are, we always say it, but we do mean it. All businesses start as SMEs and then they grow. And I think what we've got to, at this time of reflection, is look at what do we need to do to actually remove those barriers, in terms of the institutional barriers that banks have to be able to grow and become meaningful alternatives to the big banks. But also, how do we reset society's taking responsibility for our own choices around banking and investments, rather than all the time looking for a regulator. I remember vividly in the House of Commons once, an SNP MP stood up. He's no longer there, so I won't refer to him by name. And he said, when I get on a bus, I want to know, and I expect to know, and I do know, that bus is secure, and the door's going to work, and I'm going to get from A to B. Should be the same when I invest or or the way I interact with a bank. And I thought, this is ludicrous. And this is a symptom of a world where we've grown into, where we think, we can underpin everything with some consumer right and obligation. Martin Lewis does a wonderful job, but, actually we also need to get consumers to take ownership, and we need to allow businesses, there's a quid pro quo. When that happens, people should then, be able to access a greater range of options. Just final word, if I may, Tally, on mutuals. For a long time when I was a minister, Kevin Hollinrake was involved, genuinely a good friend of mine, and the APPG for Fair Business Banking, which picked up a whole lot of individuals who, over many years, had experienced, in their view, poor behaviour from the banks. Most of the time, the banks reflected the legislation and obligations that we put down. And Greg mentioned, in essence, anti-money laundering, KYC, know your customer, checks that banks do to verify who they have on their books. We've done that for good reasons. But often, the legislation that we intended to be light touch, and we know as politically exposed people, when we try and get a mortgage, I think, oh no, you're a PEP, you can't do anything with you. Is it being dealt with proportionately? And has the legislation and guidance from the FCA enabled that? And is there enough of a dynamic between a minister and the FCA? I like to think there was some progress when I was in minister, but maybe I'm being too positive on my record. But we have got to get that tighter and better, because then when we come to these conversations, we can say, look, we've done A, B, C, we've achieved these outcomes, and it will create a better environment for banks to more quickly access the services and financing they need. And I've always been a great supporter of the industry. I think our banking sector is world-class, but there needs to be better competition to drive it forward. And the final thing I'd say is open banking has been too slow, and we need to move faster on that, and we need to get to open finance, which basically means more applications and products that help the consumer get the absolute best that is available. Thank you.
Thank you very much. William, it would be great to hear your perspective from the British Chambers of Commerce.
Great. Thank you, Tally. So the British Chambers represent 50,000 companies across the UK, the vast majority of which are SMEs. I think it's 92%. So we, in a sense, recognise and speak to that value, that SMEs are the beating heart of the economy. And we do regular surveys, whether it's economic confidence surveys or quarterly surveys. So we get a lot of data back on a rolling basis throughout the year in terms of key issues that SMEs raise. So where are we currently? Tax certainly is the number one issue. You perhaps wouldn't be surprised. A bit of a shift in the last 6 months. So tax certainly. The impact of the employer's national insurance contribution rise and other various compliance costs that SMEs particularly find burdensome. There are some inflationary pressures, particularly in supply chains. So, general costs, energy costs come a very close second. But there is also a trend that one picks up from our survey work about unmet need when it comes to the financial system. It's true that not every startup can be a scale-up, but there's clearly something in terms of the scale-up route that Britain needs to get better at. We don't have any trillion-pound companies here. In the United States, they find it much easier in their ecosystem. Maybe it's partly about the attitude to risk, as was mentioned earlier, that allows that to happen. But we need to look at routes that allow startups to become scale-ups, particularly in areas where there's research important that we want to commercialise in terms of key industrial sectors. But for a lot of SMEs who are providing the services in communities, have great relationships with their communities, they need finance to survive, and that is the problem for a lot of SMEs right now. We have a lot of SMEs who are having to rely on credit cards to pay the bills. So there is something that needs to be done, it would seem, taking that survey data about how our financial system is working and whether additional options, new competition needs to come onto the market to provide new areas of finance. And if we look at the subject matter of our discussion today, one of the areas where there's been a lot of recent work and a lot of going to Germany and going to Sweden to investigate and learn is in relation to mutual banking. And there is a lot of data from those countries. Admittedly, their financial system is different from ours, but nevertheless, about the positive impacts that having mutuals as part of the financial mix has allowed in terms of place-based growth. And that's very important for our network, which is companies in Chesterfield right the way up to Perth and Angus. So it's something that we should look at. As John said, moving to an open finance model is something we would very much endorse, but we also need innovation in terms of what mutual options can be added. Just some really quite scary stats. We do recognise how much SMEs contribute to our economic growth, but we have the lowest level of borrowing by non-financial businesses as a percentage of GDP of any country in the G7. Now, that's not something we should be satisfied with. And amongst SMEs, that gap is particularly pronounced. 86% of SMEs say they have no demand to borrow. And that holds back investment. That holds back the ability to grow a business and get that additional economic growth that we want to see. So one of the things that we hope that this Parliament will do is look at the regulatory structures, examine what additional competition can come onto the market, and how that can grow the overall supply and meet what might be unmet need for SMEs to be able to get debt finance, to grow themselves and grow Britain.
Thanks, William. Simon, I saw you nodding your head at some of the mentions of international comparisons as well. I mean, Greg mentioned his visit to the UAE, and then you just heard there about Germany and Sweden. What do you think, where should the Tory party be looking to sort of replicate or learn lessons from?
So I think I'll start with Greg, if that's all right. So Greg, it would be a pleasure to speak to your builder. And I say that because, genuinely, so I say that because we launched a new proposition about 3 years ago focused on the smaller end of the market. We sell about 5,000 of those a month. The stock is towards 100,000 since launch. And the latest product proposition we've got is extra cash back for builders. It's a tradesperson proposition. So I'm not being flippant when I say we'd really enjoy seeing that business because we're there for them. 3 million quid so far this year paid out on cash back to businesses, big and small, right? So we're absolutely there for those businesses. I think to go to William's point on 86% of people are non-borrowers or businesses are non-borrowers, I mean, our stat's 90, so it completely chimes. I do understand that holds back potential for investment. But by the same token, I do think there's a piece genuinely about education in the market for businesses to say, you might feel like you don't want to borrow, but do you understand the opportunities if you do? And then where would you go to get it? To the points on, international, where we focus internationally, I mean, Nationwide is a UK-centric bank, right? So I think it would be about learning from different geographies and, what are the opportunities that mutuals there enjoy and, how do we play them back into the UK? Just on John's point in terms of regulation, it does need to be a level playing field. And I say that because the Building Societies Act is outdated. So I'm going to give you an example. We have a small number of customers, and I'm going to quote a bus company in Edinburgh. So relatively small customers, and we hedge their commodities for them. So we hedge diesel costs. We back out that risk so that we're clear 100% into the market. So Nationwide is sat on no risk. As we bring together Virgin Money's balance sheet, including commodities, trades, with Nationwide, we're precluded from having any such commodity trades as one example. So I have to say to those customers, I'm really sorry, I can't help you as part of a building society. Why do they come to us? They come because we extend them a credit line so they don't have margin calls when the trade's moving in and out of the money. So, from sat inside a mutual, we really do need some support for that level playing field because that will let us do more for customers and lend into them further.
I mean, John, what do you think about that? Is that something that you think the party will be looking at doing?
Well, the truth is, this isn't about the party having a position on. This is complicated regulation of financial services, which is done by the FCA and the PRA. under principles that we set down in legislation. And what I was doing when I worked, I used to meet with Andrew Bailey regularly when he was at the PRA, then Sam Woods and Nikhil when he was at the FCA, say, look, these are the things that people in the industry are saying. This is what we need to do. What are you doing about it? And if it meant meeting with the CEOs of 9 smaller banks to say, well, how are you going to improve the capital requirements so that there isn't a cliff edge and you've got the room to scale up? I mean, I think that there's been a recent review of ring fencing, essentially after the 2008 crisis. The idea was that you'd sort of separate your sort of retail domestic bank from your what was commonly characterised as casino banking. There's no need for that to happen because the PRA have got all the tools in place to deal with any problems that would occur if a bank failed. But somehow we don't get rid of it. I think Barclays are pretty keen because they've organised themselves to respect that. And so therefore there seems to be a sort of an impasse. But those sorts of changes are sometimes not very accessible to Parliament and to parliamentarians because, as Greg and I would spend most of our time meeting with people with businesses of 1, 2, 5, 10, 20 people, absolutely the vast majority of the economic activity in the country, and they're not concerned by all of that. But actually, we do need to face into some of these things, and I think ask some really searching questions of the FCA and the PRA about how are they going to grip the competitiveness challenge that the new government have given them. And, frankly, it's on them now to accelerate some of these changes and remove some of these frictions and tensions that stop you giving the range of services that you need to give to a growing business before, you're put in difficulty because of the restrictions that you describe.
William, Simon addressed the stats that you had reborrowing and sort of mentioned education in the market for that. What's your view on how you actually make some sort of difference?
Well, education can help because, if firms are in such a position that they're having to use credit cards as a means to pay basic overheads and bills, then that is not a sustainable position for any firm. So understanding the products that are already out there in the market and can help, and to be fair to the government, they've made some changes in the last year or so in doing some consultations around the business bank and different initiatives there. But again, one of the things about introducing additional competition into the market and having mutuals as part of the mix is that, in some sense, it does allow for businesses at those very early stages of life to be able to have some potential to grow. One of the things about the mutual system is that it is less based on what is the credit score, looking at traditional risk-based models when it comes to allocating loans and available finance. And that could be useful for a company which has a terrific idea or concept, but just needs that extra bit of support that new providers within the sector could do. So I think education, crucial part, Tally, but I think fundamentally it comes down to, as John said, what is the regulatory system like, and does there need to be some change to bring some additional competition within it?
Greg, obviously you were in the shadow business team until recently. John spoke about personal responsibility and ownership, and then we've heard now about some sort of reform of perhaps a regulatory process. What sort of stuff were you looking at when you were in the shadow business team, and what are you sort of hoping will come out of that?
There's a whole panoply of things that we've got to look at to help businesses thrive and survive. At the end of the day, in the environment we're in now, the most things that are feeding back from SMEs are, as was pointed out earlier, the increasing tax burden, the cost of employing people, minimum wage, things like that. But I think if we're to genuinely look to the future and reflect on what we can do differently, John very eloquently touched on this in his earlier comments about how it is in this country that no matter who's in government, any government puts through a set of regulations with good intentions on could be any sector, and then I don't know whether it's the British instinct or whether it's something else at play here. We instantly go to, dot every single I and cross every single T and take those regulations to the absolute nth degree, rather than looking at what the actual spirit of those regulations was. Now, I don't know whether through, to go parliamentary and technical purpose clauses in bills or something else that helps those interpreting regulation in compliance teams in businesses, or consultants to smaller businesses trying to advise on compliance, or within the banks, or whatever it might be. I mean, certainly over the politically exposed people, some of the horror stories you hear from colleagues of those regulations being taken to mean something they were never ever intended to be is actually really serious. And we've got to find a way of better explaining the spirit of regulation when regulation is deemed to be necessary. As a Conservative, I'm a deregulator by instinct. I want to get red tape and barriers out of the way of business. But where regulation is necessary, and regulation will always be necessary in some areas, we've got to find a better way of explaining and locking into interpretation what was really meant by it, rather than this quite extreme set of ways of behaving we seem to have as a country when interpreting any regulation.
I mean, Simon, you were sort of agreeing at points there, so it'd be interesting to hear.
Yeah, so I think that's right. I think the pet piece is a really interesting one, because I can completely understand, clearly I'm sat on the other side of the kind of, tick and cross, if you see what I mean, and I can completely understand what a pain that must be. The sort of liability test for us is high. By the way, this isn't a case for the defence. I'm actually saying we should make it much easier. I'm sat next to you four, clearly brilliant people that aren't going to cause the bank a problem. So to the extent you have problems with PEPs and such like, just need to try and look at the spirit rather than the dot the I and cross the T, because it's equally hard, that regulation from our side, because we have to jump through the hoops, for the sake of you four brilliant people. So, agreed. And that's not to suggest, we work so hard at making sure we're always the right side of wrong on AML, because that impacts AML, because it's regulation, but also if we're sat on mule accounts, for instance, that facilitates customers, whether it's SMEs or other, losing money. So we work really hard on it. I think for the easier stuff, like as you described the PEP thing, spirit of law rather than the dot the I and cross the T would be great. But it's broader than PEPs, right? It carries across the whole piece.
Well, look, we'll go to the audience if you have any questions. We've got a microphone roving. If you do, just put your hand up. Otherwise, I will happily continue asking more questions of the panel myself. There's a gentleman just here. If there's a certain member of the panel you'd like to hear an answer from, please do also say.
Yes, well, I'm not quite sure, really, because it's partly political, partly banking. The new procurement regulations that are coming in, particularly for local authorities, I'm afraid I don't know whether they apply to government. They should do, to promote SMEs getting contracts. We're talking about big money here, of course, across the country. Firstly, do you think they'll work? And secondly, will the banks support SMEs in order to be able to apply for contracts?
Thank you very much. Greg, is there anything I saw a bit of nodding there?
I think as the base principle, trying to lock in taxpayer spend to supporting local businesses in an area is always a fundamentally good thing. We as politicians, in our own constituencies, I see myself as an ambassador for local business, and I want to see the businesses in my constituency, be it a taxi firm in Princess Risborough, or whatever it might be, get those council and hopefully government contracts. Will it ultimately work? Well, I hope it does, but the proof of the pudding will be in the eating. Because I think there are times where if a local business bidding for a particular council contract doesn't already have the economy of scale, going back to the start of this entire discussion, because they've been unable to secure the finance to underpin a credible application to provide something at scale that's taxpayer funded through a council, through a government department, whatever it might be, then that application is going to fall over and it's not going to get the scoring when the council officers put a recommendation to their cabinet members and their council leader for them to win that contract. So it all comes back to the financial credibility and stability of those SMEs being able to say with confidence, we can actually do this, and we're not going to fall over. It's not rocket science. I've got quite literal rocket science in my constituency, actually, at the West Coast Space Cluster, but I don't see the council having a particular need for satellite thrusters. The test we've actually got to apply to this is getting the backbone of our SMEs to have that robustness in the scoring that goes with any council contract. I've sat over, I spent 12 years in local government, and I remember those processes that you went through whenever you put something even small out to tender and out to the market, what you had to go through, and the financial modelling that goes into that against anyone bidding for a public sector contract, I think is going to become difficult if they can't prove that they've got the financial borrowing capacity or whatever it might be, and that can only come from one place, and that's the banks.
Would you like
Sure, yeah, I think the ambition's brilliant, right? Genuinely, for all the reasons that Greg just described. It actually makes it easier for us, right, to advance finance when businesses have that sort of secure revenue. So we'd absolutely be here to support that ambition. I'd say, genuinely, we're here to lend to viable businesses, big and small, and the really important word is viable. So there's a very different probability of getting financing if Simon has dreamed up a business idea that he's never run with before around his kitchen table. Do I know my market? No. Do I know who my customers would be? No. Do I have any money to put into it, be that PG or anything else? No. Have I thought about any of it? No. And I'll come and ask for a loan. Probability quite low, right? As opposed to, I've understood those different things, I've got some education on the type of debt and where I'm most likely to get it from, and actually having a piece of paper that goes, and by the way, I'm tendering for a government contract, makes it easier for banks, be that a mutual or a core bank, to advance funding. So, I mean, it's genuinely good luck to SMEs, right? Because I suspect getting into that sort of next bucket up and getting that first contract is the hardest one, because once you've got the first, they'll fall off the back. And I think it is over to the local authorities. They have to be a little bit brave, I suspect, and take a chance as opposed to just running with the person that did it before that's of a bigger scale.
Can I just add to that? Banks aren't charities.
No.
Local authorities aren't charities. Local authorities want to procure reliable, consistent, high-quality services for their residents, and banks want to have customers that are not going to default and be unreliable, and they can attest to who they are and what they're doing. So, again, what I think needs to happen is that we need to be honest about some of the trade-offs in this. It's all very well to say we want to buy local all the time, but as Greg set out in his example of scoring, it's difficult for an SME to be competitive against a much bigger, experienced provider. That is just the facts, and if you're responsible as a budget holder in a council, you've got to weigh that up against the upside of having somebody local and reliable. And the same principle sort of applies to a bank, in the sense that, the bank, in the end, it's providing a service, but it's, whether it's a mutual, where there's perhaps, different profit models and shares of profits and so on. Bottom line is they also need to have that same underpinning. So I think there are things that can be done, and I think the processes need to be more transparent. I think the problem is for many things that in national and local government, they seem to go into a black hole and some random officials look at it and you don't really see what's actually happening. Oh, it's commercially sensitive, we can't tell you that. So you end up feeling like, as a politician, that you've done what you think is the right thing to move things in the right direction. But the outcomes, for quite good reasons, aren't something you then know about. And then that's difficult because people feel we haven't changed the dial. And I think we're in a season of politics where we seem to valuing and cherishing the rhetoric of politicians more than the reality of the complexity of government. Yeah. And I hope that will change. I believe it will change as we move towards the next general election when people are making a real choice. But I think it's important for us as politicians, serious politicians, to come up with solutions that deal with the sentiments that underpin people's motivation to vote.
Tally, if I can.
Having delivered £2 million contracts for Surrey County Council
Yes.
2 years ago, I agree with all of that. I mean, I think quite a lot of this is just window dressing. I think we can have a policy to make it work, but this isn't it.
And frankly, if you default to local every time, it costs a lot more because a small local enterprise cannot achieve. And that's why you see in government, big contracts, framework agreements, where lots of services. I mean, the classic one is with food and school food, where we would like to think, oh, local farmers provide it, and they do in some cases. But, actually there are economies of scale, and the question is, let's be honest about the trade-offs around those costs, and then somebody's got to pay for it. We either pay for it in council tax, or we pay for it in a supplement or whatever, but what we can't have is have it all. Yeah. And I think one of the things that our leader has said in some of the speeches she's made this week and no doubt tomorrow is, we can't have it all, and people want a degree of honesty and clarity over where we're going.
William, would you like to add on that?
Yeah. I think one of the things that's really interesting is one of the sort of pieces of legislation that's been put in place as a result of Brexit. So in 2021, 2022, there was new rules put in place on subsidy control. And we're involved in a consultation that the subsidy unit at the Competition and Markets Authority is doing at the moment as to whether that legislation is actually too onerous. And in roundtables that we took part in, we were hearing local government officials saying, well, now we have to do a much more intrusive amount of scrutiny about grants that, voluntary groups and others are looking for in comparison with what we had before. So this is an area where perhaps, we need to make some, in terms of how the regulation is being implemented by the CMA, to free up some of this bureaucracy that's come up with the awarding of subsidies, or what are deemed to be subsidies at local government level. Tally, the other area that I think is really important to address is, one part of public spending that is going up is, of course, defence, and there are very good reasons for that. And the government a few months ago pledged that SMEs would benefit the most in terms of new supply chains being created from that uplift in defence spending. So I think one of the things that we would like to work with all political parties on at Westminster is, when are we going to see the realities of that, and how? We've had things like, defence industrial strategy. We're now waiting for a full defence investment plan. But there are SMEs and chambers up and down the country who are saying, we're itching to get involved in these supply chains. We want to hear where these new munitions factories are going to be, the opportunities coming from this uplift in defence spending. But we need to make sure the delivery is there for SMEs. So you come back to that old chestnut that I'm sure John reflects on very well. Governments can say things, but they're judged by the actual delivery on the ground.
Very fair.
Simon, I think there was something that you wanted to add earlier.
Just to John's point on banks not being a charity, I mean, that's completely right. And then to reinforce, a mutual is owned by its members, so every decision that we make that makes or loses money, I don't just mean lending, you know, spending on costs or whatever it is a pound in and out of a member's pocket, very literally. So Nationwide's returned to members £2.8 billion in the last 1 year. So that's through the big thank you, fairer share, so money straight into deposit accounts, and better pricing on savings and mortgages relative to the market. So that's £3 billion that goes to members, which actually finds its way back into the economy. And therefore, I always use the word viable business. It has to be viable, because otherwise, basically, we're taking money out of a member's pocket and the economy more generally.
I wonder if it's worth us just focusing on this whole issue of how banks sort of interact with customers, because during my time as a minister, so much changed in respect of that. You know, bank closures is a classic thing. There's another wave of bank closures, and we have to deal with that. I mean, there are a couple of things I just sort of might want to say on that is, you know, I had one in my own constituency. I represent Salisbury, and I went to Wilton, which is the ancient capital of Wessex, 2-3 miles outside, and I looked at the economics of this Lloyd's branch, as it happened to be, and it was, you know, only 15 customers went in there every 2 or 3 days. The cost of then maintaining that building. So these apps have become more sophisticated. However, there are obviously members of our constituency, you know, often older people who are disabled, who need access to face-to-face. So then we introduced the banking hubs. Initially, the banks resisted it, then they embraced it, and then they've, you know, extended it. The threshold in terms of the size of the settlement has gone down and down and down. And I think it's true to say that Nationwide has got a distinctive offer on that, which I think has probably given them a market advantage, although the cost to serve for some of those people will be higher. But, you know, the bottom line is, again, I was reasonably sympathetic to the banks on some of this, because actually maintaining a network on every high street in a town of 10,000 people isn't going to be realistic. And you know, one of the things, again, you've got to mediate as a minister between that sentiment which says, you know, banks keep the bank branches open. Well, why? You know, why should they? I mean, they've got to answer to their shareholders. So why should politicians insist? What we've got to do is have an honest conversation about what sort of mobile banking or collective service needs to be issued. What role does the post office play? How do you secure enough of those functions? And for SMEs as well, how do you deal with cash? You know, we're not going to a cashless society by any means yet. And, you know, how do you deal with those things? So, again, there are trade-offs. We won't have everything as it was 30 years ago, but that's because we don't behave like we did. So I think, you know, again, let's have in our policy making in this season of opposition rational thinking that actually is true to reality, not just say, oh, you know, there's 3 people in every 1,000 who can't access this, so therefore we've got to keep the whole branch. That's not the right answer. Equally, not caring about those 3 people is also not acceptable.
Yeah. Are there any other questions? Yes, the lady here, if we could get the microphone over.
Hello, from the age of 16, I lived in South Africa. The thing they have is in supermarket hubs. You can go and you can touch a screen, not a keyboard. Please note, viruses are transmitted on keyboards. So why don't we have first world banking in Britain?
Thank you very much. John?
Well, I mean, all countries have a different banking culture. You know, I mean, I used to get this from Kevin. I always use Kevin because he used to be a thorn in my side for most of my time. But, it's sort of, why can't we be like Germany? You know, why can't we be like X country or Y country? Why can't we be like America, where, you know, the banks grew up in a different historic context? You know, in Germany, you know, closer to the sort of regional institutions and regional government, and therefore more like this sort of, sort of mutual heaven that we're asked to reflect on in this panel today. But, you know, there is something about intimacy, and we have some models that have come over, like Handelsbanken in the UK. I'm sorry to talk about, you know, but they cherish a model where they've got a bank manager locally who is licensed to make decisions, which I think is very appealing. And I say to some of my local businesses, well, try them, because they can make a bespoke decision where you've got somebody you can talk to. And for some businesses starting out, that is really, really important. There are different ways that banking will evolve, and there is room for innovation. I think in my earlier remarks, I say that, we move from a startup unit, we now need a scale-up unit, and comfortable with different interventions on different parts of that journey, because essentially we've got 4 banks who have a vast share, and whilst it's changed a bit, it's not changed as much as it could have done. So I think the South African model, there's always lessons to learn from other countries. The question is, how does it work with our cultural practices, and what would be the regulations that would be needed to be removed, adapted to make it thrive? But the combination of different services and in a retail environment that is a hub is, I think, the way that a lot of things will move, and they do move. If you go to big supermarkets, you see that in the precincts, in the entrance to it.
William, you were nodding along there.
Yeah, indeed. And I mean, there are only a quarter of UK SME employers who have sought external advice or information on their financial needs or banking options in the past year. So there is an issue there that, that system is going to work a lot better. There's also the sense that even those SMEs who are aware of debt financing that's available still have that issue about being risk averse. So there's something about the ecosystem that we need to get right that allows animal spirits to flourish and the economy to begin to grow through that private investment that's released through this. That's essentially what we've got to get right out of all this.
Yeah, thank you very much. Could we go to the lady just over here, please? Thank you.
Oh, thank you. I'm interested in the panel's view on business rates and the reforms. So I was pleased to hear about the hospitality announcement yesterday. But retail bears a disproportionate burden, and we've talked about high street presence and branch networks. Does the panel have a view on how on earth we can untangle what has historically been one of the worst spread of business rates burden across different economic sectors?
Greg, do you want to address that?
He said he does.
I saw that face and thought, must ask Greg.
Look, there's no surprise that business rates have become a huge burden on the high street. I see that in my own constituency in Princess Risborough, in Wendover. A business I raised in PMQs just before Easter with Chequers in my constituency. It's very easy to put a point to the Prime Minister and say, when he's next at Chequers, why doesn't he pop in and explain to
Have you had an
such
invite?
And such a business? Sorry?
You haven't had an invite, though, have you?
Not to Chequers now.
One day.
Not since July.
Not since Rishi left, no. But the wider point I'm making is I can see the impact of business rates. I think, we did a lot of good things in terms of business rate relief that this current government has undone very badly. We've now got this big commitment again, particularly for hospitality, that Andrew Griffith made yesterday, and that's a fundamentally good one. However, I think as we reflect on our policy position towards the next general election, there does need to be a slightly bigger offer that reflects that the business rate system at large is something that businesses are saying to us as politicians isn't working in an equitable and fair way. Now, that's for our Treasury team and our business and trade team to look at the detail of that and listen to those business voices and to see what we can come up with. But for now, we've got that offer on the table about back up to 100% business rate relief. I think that will be a lifeline for many businesses in my constituency, certainly pubs, certainly cafes and restaurants and bars on the high streets. And if we don't come good on that, hopefully it'll pressure the Treasury to come good on that earlier. Sometimes when oppositions do put something great on the table, governments nick them, and let's just hope in this case they do, because I'm really, really scared that the other side of Christmas, if all those hospitality businesses have not seen the sort of trade that they usually enjoy at Christmas, and I'm afraid the warning signs in our current economy are that they're not going to see the trade because people are not spending, they don't have the confidence to spend. It's going to be a lot more than 2 a day that are closing once we get into 2026, and business rates relief being cut by Rachel Reeves is an enormous part of that.
Mm-hmm. There was a gentleman just here in the striped tie.
Dave Blatchford, a property developer from the Southwest, a small SME. We've got a disparity at the moment between being able to borrow on certain parts of projects we're trying to grow on. So we've got a big housing developers doing that side, and there was medium and small. We've lost nearly 86% of the mediums. The small should be picking up. But the problem is, yes, the banks will lend us money to the land and part of the development, but they won't lend money to the planning process. And one of them at the moment, for one house, is costing £165,000 at planning with a 765-page document. That's the problem. And if you can't finance it yourself, this is holding you back from doing other developments. So I don't know how the panel see we can get round this regulation or help to make that quicker for us to move on.
I think if perhaps John and Simon could tackle this, and we're almost out of time, so just relatively briefly.
Look, at different stages in the cycle of an economy, different banks have different preferences for different sectors and different rules around that. The interaction between government action and regulation and those choices is a very good question to be asking. In the end, it's about their risk appetite. And sometimes, you know, people say to me, well, I can't get banking, business can't get banking because, you know, that sector is not covered for this season. And I struggle with that. But on the other side, I sort of feel, you know, what's rational and irrational behaviour, and what is, this is just too much hassle and cost to serve. But what I think is the answer, is a conservative answer, which is actually bring more competition, make it easier for more finance providers to enter the market, so that actually, you know, be it Oak North or be it another business lender, will find a way of, you know, getting to you and you getting to them, so that you can come, you know, you can move banks more easily and get some of that. But part of this too is about the uncertainty in the planning process, the time delays, which clearly imply a cost of borrowing and a risk, which, you know, the bank's got to take a view of whether you can stand that payment. And, you know, it is complicated. I think there is a great, all banks say that they record lending for local businesses and all the rest of it, but in practice, you know, there are some severe constraints. I think the banks that will do well in the SME market are those that can genuinely demonstrate local discretion, decision-making, long-term, genuine relationships on the ground, where they actually get to know a business in the business. And constituents that I know have done well, where somebody's been their banker for 20 years, built up a trust, see them through difficult times. And indeed, I've got one constituent in mind who absolutely went through that situation with a building project, where there's special arrangements, and a range of instruments were offered around extensions to overdraft and various other things that got her through that journey. And that is what you need in a bank. And we need to make sure there's enough competition. But I don't think what government should be doing, and certainly a Conservative government, should be prescribing the rules and individual lending decisions.
Simon, do you want to very briefly touch on that?
Yeah, so we do development finance.
you are.
More often, no, but more often at the bigger end of things. It doesn't really matter. My point is, all of that plays into the credit decision, full stop. I mean, the question is actually how it costs towards £150,000 to get planning for one house, if I heard you correctly. That feels bonkers. And so it is, how do you unlock that?
Yeah.
Because, of course, it's 150 right now, it might be 200. How do the banks think about that risk and share it with you? So I think it's more procedural rather than we're not here to lend against it.
Well, we're out of time. Thanks ever so much, everyone, for your questions, and to the panel for your insights. I really appreciate you coming along.